In today's video, we'll be preparing for FOMC meeting minutes that come out Wednesday at 2 p.m. Eastern. We're going to talk about trade setups. I'm going to talk a little bit about the inflationary numbers that came out last week and what they mean for markets now. And I'm going to show you my personal trading setups on my brokerage account. Let's jump in. So first of all, look at the markets here today. We can see the S&P 500 flat. There is a US holiday right now. So of course, some markets are going to be very quiet, especially the indices. Same thing with the Nasdaq and the Dow, pretty much flat here on the day. If you take a look at the dollar, however, the dollar is pushing higher this morning. We'll see if that can continue to last. And the euro is selling off, which is great for my euro short position, which we'll discuss later on in the video. The pound dollar coming down, gold market kind of leaking lower here, and oil staying surprisingly very, very strong. We'll talk about all of these markets and more. I want to talk a little about some of my own positions, but I'll talk about those towards the end of the video, so stick around for that. There's something very important that we need to discuss here in today's video, which is of course the COT positioning. I missed my Sunday episode as I was traveling back from Colorado. I did have a great time, by the way, and I only fell a couple times down the mountain when I was snowboarding. It was a lot of fun. Anyways, the COT data here actually came out, and it was very, very interesting to take a look at here today. So I figured that we'd discuss this a little bit. So in terms of the COT overall net positioning, remember that this first indicator here, this top section of this indicator on the Edge Finder, helps us to look at the longer term net positioning of institutional money on our favorite currency pairs or assets in general, right? So for example, right now we have things like US 30 as the #1 proportionally most bullish asset on the list. You also have gold and a surprising third place in the British pound. So the British pound, the gold market, and the US 30, these are on the futures market the most bullish in the non-commercial COT positioning. Now, this is not necessarily a signal for this week or for next week, right? This is more of a longer term signal. We can also take a look at the bear side, JPY, Aussie dollar, and bonds. So if you take a look at these kind of markets, this is a good longer term indicator of bullishness and bearishness. Now things get interesting for traders when we look at the weekly COT filing and the impact that certain markets had. Remember we said that surprising third place? Look at the pound this week, guys. We had a huge increase in long contracts week over week and a huge closing of short positions, minus 9,388 short positions there. That's a huge shift in favor of the bulls. We saw, of course, a overall net shift of 6.4%. And again, putting the overall positioning here at 69% long. Nice. So my point here is that, again, we had a huge shift in bullishness for the pound, but we also on the currency side had Kiwi show up here, playing ball with that 3.43% net bullish position. So that's kind of something worth mentioning at the same time. The S&P 500 saw a nice little increase. The bond market actually saw some as well. You have Australian dollar, but then we take a look at some of the bearish stuff. Look at gold. Gold had a huge COT sell this week, which I thought was very, very interesting to look at. And again, when we talk about these COT points, these are not, of course, a holy grail indicator by any means, but it can give you sentiment for what institutional money is doing. What are they buying and what are they selling? And by the way, we do have this software that we're using available for a 30-day trial. If you would like access to 30 days access of the Edge Finder, there will be a link down below in the description. When you click that link, it'll take you to an apply form where you can just fill out some information about yourself, and someone from our team will reach out for more information about how you can get 30 days access to the Edge Finder to try out this software yourself. So make sure to fill that out. So here's a look at the dollar index on a one-day chart. What we can see here is that markets have been trending up overall here, and I have been bullish on the dollar. My thought process has basically been there's been a lot of strong economic reads. Inflation was really hot last week, which helped overall the bullish case in my personal view. And we did get some pretty big pops on like CPI and PPI, but we saw it sort of fade towards the second half of the week. In my personal view, this is sort of just kind of consolidation, and I am still bullish on the dollar index. My target is and still currently sits at 106 in terms of where I think price could move next. Now, this is not a certainty, and nobody can forecast the markets 100% of the time. But my personal view is that all of the strong economic data and the hot inflation reads could push back on the interest rate cut expectations. In fact, I'll show you what we've got in terms of data for that right now. now. So here's what the market thinks in terms of when rate cuts are coming. You can see that March has a pretty much certainty that we're not going to get rate cuts. Of course, staying steady at 525 to 550. But then 63.9% chance that we have another hold as of May. So now the markets are thinking that rate cuts are not likely to happen until June or even July. You can see the probabilities ticking higher for rate cuts at that point. But again, this is a very different story than what we thought, or at least the market thought several months ago. So far, we've really been right in thinking that the dollar would remain strong because of the strong economic data could push back that expectation for rate cuts. And that's exactly what we've seen playing out. And that's been a real good overall call between myself, Frank, Ivan, some of the traders that we trade alongside here on the channel. So back to the US dollar in terms of the index, I do think that this area of support could continue to hold. This was a past level of resistance. So from a price action standpoint, I do think we have room to expand higher. So I actually have some positions on this currently. So here's my Euro USD signal that I shared inside of our VIP group, which has been, kind of a mixed one. I did see a huge slide down lower on CPI, which was great for the trade. And at that time, I did trim my stop loss just a little bit. So my stop loss is at this point only 35 pips. And while I'm a little frustrated that didn't keep going, I'm still willing to hold the trade here and see if this one wants to play out. We're in a nice downtrend overall. We're holding levels of resistance. And as long as we don't break through the highs, I'll continue to hold this short on the euro to see if we can get some run to the downside. Again, my thought process here is that, Ivan actually made a great point on today's live stream about the inflation difference between these two countries. In fact, we'll roll that clip here really quick so you can see it.
If we take the current situation, the Europe has 2.8 currently 2.8 CPI. It's the lowest one of the large the major countries against the one that is potentially increasing. So the interest rate differential are supposed to increase. At the moment, it is the inflation that is creeping up. So you can say that Europe and Japan is in the same boat of having low inflation. Though is going to have another this week, and that's kind of where I'm basing my most off. And then of course, with America, with the PPI, with the GDP, with the CPI, everything is showing that it's going to be higher for longer. And then, what was it? UK went into recession. Germany has been into recession. And they say they're going to escape the recession. But it's definitely one of the worst performing country of the major ones.
So as Ivan was mentioning, the idea basically was that overall inflation in the euro area is more tame than in the US. We talked a little about that on stream, and overall that kind of has both Ivan and I both bearish on the euro at this time within the VIP group. We've shared signals, we've shared our ideas for that inside of the Discord. By the way, if you're not in there, there is a link down below in the description for you to get some more information, or the very first link in the description if you chat with us and let us know you'd like to join that. Someone from my team will get you set up with a membership as soon as possible. Speaking of signals inside of the group, I am also long Nasdaq, and this one has worked out really well. So we saw price come down into this level of support. I marked this one up and I went long here. That one immediately exploded, has come back a little bit, but my stop loss has remained unchanged. If we do kind of form a higher low here, I'll probably trail a stop. But for those of you guys who are following along in the group, my thought process with this one is as long as we hold support levels here, I remain bullish on the Nasdaq. And I could talk at length about this, but I'll try and keep it really simple. Yes, a stronger dollar might indicate that rate cuts are not coming as soon. You might say, well, doesn't that make you bearish stocks? And the answer is no, because the inflation numbers, in my view, are strong because we have growth. Growth is good for stocks. However, it's not equally favorable to all types of stocks. The Nasdaq is comprised of a lot of tech companies, and a lot of the weighting goes towards companies like Google and Amazon and Apple, these big companies that make a lot of money and are not super dependent on low interest rates in order to make a huge profit. That's why I like those companies. The Nasdaq has a lot of that concentrated. So I am long Nasdaq specifically. I don't think we need rate cuts to be bullish on stocks, at least not a rapid cut in rates as many traders, many of the bulls out there have been looking for, right? They've been looking for a lot of rate cuts. And I do think that we will get rate cuts, but I don't think we need them immediately for stocks to push higher, especially specific stocks like the Nasdaq. Some of the concentrated winners that we've been seeing, I think could continue to win and outpace some of the other more interest rate sensitive areas of the market. Speaking of interest rate sensitive areas of the market, let's talk about gold. I'll keep this one real quick too. Gold is just really not trading well right now. In my view, there's not a lot of follow through. There's not a lot of conviction here. We don't have some sort of big global fear event that's driving gold higher. And we, in order for gold to really trend well, you either need really, something kind of terrifying the world. Fear is a strong motivator for gold. And at the same time, you don't have like interest rate cuts on the horizon that are sort of a known factor to give gold the boost that it sort of tried to do earlier in the year. So I think right now, gold is just a, wait and see. If it does break through lows here, you may have kind of continuation. There arguably could be some downtrend in the short term. But for me right now, I'd really like to see gold break strongly one way or the other to get a solid idea. Here's the Edge Finder's current top setups. What this does is it looks at lots of different factors like the commitment of traders data, retail positioning, seasonality, momentum, economic factors like PMI, retail sales, GDP, inflation statistics, labor statistics, and interest rate statistics, and it generates bullish and bearish signals. Right now, where we're getting the most confluence on the bullish side is things like pound pairs, pound Aussie, pound Swiss, pound dollar, pound yen, all getting bullish reads, of course, helped a lot by that COT data that showed out very strong for the pound this week. Then you also have oil on the top, the DAX, you have some yen pairs as well, and you do have some almost bullish reads for indices, NAS 100 and S&P 500. So kind of interesting to see there. We could flip it around, just click this button here. For those who have Edge Finder, you can click the score button, it'll reverse everything for you. Cool little trick there. Aussie CAD, Euro Pound, Aussie Kiwi, and Euro CAD. These are your more bearish reads on the Edge Finder right now when looking at the data. In terms of market news that could be crucial to your trading this week, here's a couple things to look out for. If you trade some of the Aussie pairs, you do have meeting minutes from the RBA here, 7:30 p.m. Eastern. In terms of Tuesday, you've got CAD CPI, and that could be something interesting. You have Aussie wage index. The big one here for the week in terms of what most of us will be watching is probably going to be the meeting minutes from the Fed at 2 p.m. Wednesday. Again, those are, of course, notes that get dropped from the Fed meeting behind closed doors, which can be very impactful to markets. You have a lot of PMI numbers on Thursday, and that pretty much closes it out. So it's a mid-level week in terms of news and volatility, but I would say be very careful around that Fed meeting minutes. These things can cause pretty large movements in the markets. Here's some of my current positions. I'm long silver, Bitcoin, the Nasdaq, and the dollar. These are some of my ETFs that I am currently long on WeBull, which I'm able to trade directly on TradingView. By the way, there is a link down below in the description if you'd like to check that out. You do get some free shares when you sign up, and you'll be supporting the channel as well. If you're not in the US, there are also some brokers that might be useful to you as well. If you want to trade FX, gold, etc., CFDs, whatever, there's all sorts of broker perks down below in the description, so make sure to check them out. I also mentioned in this video some of the trade alerts that are being shared, so if you'd like to get access to that, I just wanted to show some visuals with that. Here's my Nasdaq trade. I also mentioned that I had gone short on euro dollar, so shared all the insights and details about that within the group. We also, of course, have Frank's indices, commodities, FX, and stock trades, Ivan as well. So if you're familiar with those guys from the live streams, you can also see their trades. If you'd like any of that information, again, first link in the description, chat with a rep. Thank you guys very much for watching. Trade safe. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.